clients. Welcome to PhillipCapital's weekly market watch. I'm Colin, investment analyst from Phillip Securities Research. Allow me to share with you a brief overview of Singapore Post, the national postal service provider in Singapore, which is set to capture growth opportunities in e-commerce in Asia-Pacific region. Global business-to-consumer e-commerce sales have been increasing over recent years and is estimated to grow to $2.4 trillion in 2017, implying a growth rate of over 17% since 2012. The highest growth is expected to come from Asia-Pacific, the biggest growth contribution coming from China, India, and Indonesia, according to independent market research company eMarketer. Key growth drivers will include growing online population, increasing adoption rate of mobile devices, and encouragement for increasing use of e-commerce from governments across Asia. However, the massive growth potential may place a strain on the logistics infrastructure in the region due to, first, lack of efficient and reliable last-mile delivery providers, second, lack of warehousing and distribution centers, and third but not least, is preferences for different mode of payments. This presents growth opportunities for SingPost as it scales up its e-commerce logistics network and investments to tap onto e-commerce growth. Leveraging on its regional network and infrastructure, and with Singapore being a premier business hub for Southeast Asia, SingPost is well capitalized to offer end-to-end e-commerce logistics solutions to customers. While further enhancing its capabilities across e-commerce logistics value chain, SingPost offers several competitive advantages. First, a wide international infrastructure supporting e-commerce logistics in Asia-Pacific, Oceania, UK, and the US. Second, its ability to tap on international postal channels to deliver goods to rural areas that are usually not covered by other e-commerce companies. Third, offering a suite of end-to-end e-commerce solutions which include front-end web services for online stores. These competitive edges have led to SingPost gaining over 600 e-commerce customers, which include notable brand names such as Adidas, Canon, Philips, Toshiba, and J Runway. Over recent years, SingPost has acquired several subsidiaries, including Famous Holdings, to extend its logistics and transportation capabilities in Asia. In recognition of SingPost's strengths in e-commerce logistics in the region, Alibaba Group has decided to invest about $330 million into SingPost for a 10.4% stake and plan for a joint collaboration to tap on e-commerce opportunities in Asia. Alibaba, one of the largest e-commerce companies in the world and operates some of China's largest online retail marketplaces, operates on a third-party platform model and relies on logistics and delivery companies. We believe SingPost will benefit from the partnership as Alibaba scales up its business and leverages on SingPost's international logistics infrastructure. Apart from strong growth opportunity in e-commerce, other key investment merits for SingPost are its stable operating cash flows and free cash flows as a result of its defensive and non-cyclical business, as well as potential boost to its property asset. Since the URA unveiled its master plan in 2008, Paya Lebar Central is gradually shaping into a major commercial hub with redevelopment plans to build up commercial space in the area. We think this will likely to further boost rental yields in the nearby Singapore Post Centre, SingPost's flagship building, which is located next to Paya Lebar MRT station. This will lead to increase in rental and property-related income, which accounts for 8% of SingPost's operating profit in the fiscal year ending March 2014. SingPost has also been paying consistent dividends, and dividend yield is about 3.6% based on current share price. However, some of the key risks and challenges that SingPost continue to face are the decline in traditional mail volume due to e-substitution impact, as well as rising cost pressures which have led to declining margins over the years, though margins have seemed to stabilize in recent quarters. To combat these challenges, SingPost has committed to invest $100 million into enhancing its infrastructure and productivity while maintaining a high level of service quality required of the public postal licensee. SingPost will also continue to focus on building up its logistics infrastructure to capture e-commerce growth. To conclude, we think SingPost has excellent growth potential and is able to combat the downside risks. Some potential catalysts will include announcement of further deals and collaborations, extending its regional logistic capabilities into South Korea, which SingPost does not have a presence in yet, and improvement in profit margins. We have initiated coverage on SingPost and we recommend a buy call with a target price of $2.07 per share. For more information, please log on to Poems and refer to our report on the company. With that, I have come to the end of the presentation. Thank you for watching this week's Market Watch. I'm Colin from Phillip Securities Research. Please subscribe to us on PhillipCapital YouTube channel and Facebook. Stay tuned for more Market Watch videos.